Good morning, viewers. It's Friday morning, March 14, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap, accurate figures and numbers. It was only 3 weeks ago that exuberance over Donald Trump's blueprint for the economy had vaulted U.S. stocks to a record high. Today, with concern mounting over the goals and impact of his trade war, the bellwether index S&P 500 tumbled into its first 10% correction in almost 2 years. On March 6th, the Nasdaq confirmed it is in a correction by closing 10.4% lower than its all-time closing high reached on December 16. It is down more than 14% from its December high. Volatility surged anew across asset classes on Thursday, extending a retreat from risk that has lopped $5.3 trillion down from a high of about $52 trillion from the US equity benchmark and shows signs of seeping into high yield bonds. Stocks weathered another rough day on Thursday with investors on edge over new tariff threats and mixed inflation news. The S&P 500 perched at its record as recently as February 19, slid to a 6-month low. This year's sell-off in mega caps deepened, amplifying the moves. The S&P 500 dropped 1.4% and suffered its first correction since October 2023, a decline of more than 10% from its February 19 record high. It lost 77 points to end at 5,521. The tech-heavy Nasdaq Composite declined nearly 2% or 345 points to 17,303. The Dow Jones Industrial Average fell 537 points or 1.30%, 40,830. The Dow has fallen more than 9% from its own record. A gauge of tech mega caps lost 2.5%. President Trump threatened to impose 200% tariffs on alcohol imports from the European Union after the bloc hit back at his levies on steel and aluminum imports. In another sign of a trade war escalation, Trump threatened to enact a 200% tariff on European wine, champagne, and other alcoholic beverages. Later on Thursday, Trump said he would not repeal tariffs on steel and aluminum that took effect this week, nor back off plans for sweeping reciprocal tariffs on global trading partners set to start as soon as April 2. Investors eyed an inflation gauge that showed wholesale prices held steady in February, although prices charged for eggs soared. The Labor Department Producer Price Index (PPI) appeared to echo Wednesday's CPI data, with cooler than expected readings appearing to confirm inflation remains on its meandering path towards downwards as it approaches the US Federal Reserve's 2% annual target. This, along with the tame jobless claims report, provided some assurance that for now inflation is headed in the right direction and the labor market is on a solid footing. Uncertainty is certainty, being driven by tariffs, but there's another uncertainty out there too, and Congress could create this uncertainty. Markets were also eyeing the ongoing wrestling match on Capitol Hill as lawmakers scrambled to pass a stopgap spending bill ahead of a fast approaching deadline to avert a partial government shutdown. Senate Democrats will discuss whether to approve the Republicans' funding bill or trigger a shutdown of the government this weekend. Meanwhile, Russia rejected a U.S. brokered plan for a ceasefire in Ukraine, saying the proposed 30-day truce would help Kyiv regroup, adding to more uncertainty. The Dow Jones Transportation Index, widely viewed as a barometer of U.S. economic health, closed 18.9% below its November 25 record closing high. Dipping 20% or more below that level could confirm the index is in a bear market. Among the 11 major sectors in the S&P 500, all but utilities ended in negative territory, with communication services and consumer discretionary falling the most. Intel jumped 14.6% after the struggling semiconductor company and chipmaker appointed industry veteran Lip-Bu Tan as its chief executive officer. Intel stock rallied after appointment of a new chief executive. Adobe dropped 13.9% after the software company forecast quarterly revenue in line with estimates. Discount retailer Dollar General reported disappointing same-store sales estimates but provided upbeat quarterly results, sending its shares up 6.8%. Speculative corners from unprofitable tech to the most shorted shares, and crypto got crushed. A $8 billion exchange traded fund tracking junk bonds saw one of its biggest losses in 2025, bucking the rise in treasuries. Bitcoin fell 3.6% to $80,155. New salvos and President Trump's tariff offensive spurred another race for havens in the Treasury market. Treasury yields fell as prices rose. The 10-year yield settled at 4.275%, down from Wednesday's 4.315%. Investors sought out haven assets. Gold prices climbed 1.5% to $2,984 a troy ounce, another record high. That's it for today, my dear viewers. And if you are enjoying our content, please do subscribe, like, and share this video as much as possible. I will see you now on Monday morning. Have a great weekend. In the meantime, happy investing, stay inspired, and remember, it's all about money.